The analysis report, The King of Weight Loss is on Sale, NVO stock analysis. It lays out a bullish case that the market has irrationally compressed Novo Nordisk's valuation.
Yeah, to a PE of what, around 16? It's treating a massive growth engine like a utility stock. That disconnect from its historical 30 to 40 times multiple is what's certainly the core of the argument.
It is. And that's actually the perfect place to start tightening up the logic.
Okay.
The analysis report really needs to significantly bolster its rebuttal to the bear case to justify calling that valuation compression absurd.
I agree. I mean, the material does a great job highlighting the PE disconnect itself, but when it gets to why the stock dropped 60%, the fears of competition and government regulation, it just kind of waves it away.
It calls it an overreaction to news.
Right. And that feels, it feels too light. A 60% drop isn't just a whim. That signals some serious market conviction, even if it's wrong.
Exactly. It leaves a big logical gap. For a deep value investor, which is who this seems to be for, you can't just assert the market is wrong. You have to prove why the risks are more than priced in.
So that's the challenge. The whole persuasive element here hinges on that point. I think the analysis needs a section that actually tries to quantify the theoretical cost of those big threats.
Model it out.
Yeah, model it out. Show us why, even if the bad things happen, a 16 PE is still too punitive. The focus has to shift from just saying it's cheap to proving the discount is overdone.
Okay, I see what you're getting at. So if the big fear is, say, generic competition eroding profits, what's a concrete way to model that?
Well, you could build a margin compression model. The report correctly highlights those incredible 83% gross margins.
Industry leading.
So what happens to the valuation if you hypothetically force those margins down to, say, 60 or 65%?
And that specific range is important because even at 60%, that is still an extraordinarily profitable business.
It's world-class. You can use that as a mathematical floor. You can show that even with that kind of hit factored in, the resulting cash flows might still justify a 25 times multiple, not 16.
Yes, that's a powerful way to frame it. You're using their own numbers to anchor the downside, and it replaces that emotional overreaction argument with a cold, calculated floor.
Precisely. And what about the regulatory risk? That one's always a bit harder to nail down.
It is. But instead of just saying government price regulation is unlikely, the analysis could look at precedent.
Like other pharma duopolies?
Yeah. Analyze historical cases. Think about insulin pricing dynamics or similar situations. It helps establish a more realistic baseline for the risk probability.
You're contextualizing the fear.
Right. You use case studies to show that even with political pressure, the profit engine for these critical therapies doesn't just, evaporate overnight.
You make the risk quantitative. You're taking this big, scary cloud of uncertainty and putting some numbers and history against it.
Exactly. Okay, let's move on to the business quality argument, the whole king concept.
The moat?
Right. While the financial strength is compellingly established, the analysis can make the king argument more robust by defining the precise competitive strategy against its primary duopoly partner.
And the report does lay out the evidence well. 83% gross margins, a 71% return on equity. I mean, it's a financial fortress, as they call it. And it correctly identifies the GLP-1 duopoly with Eli Lilly.
All true. It's powerful historical data. But the explanation for how NVO maintains that dominance feels a bit generic. It just says they have the best supply chain in the game.
Which might be true, but it's not enough.
It overlooks the specific forward-looking strategies they need to actually win that duopoly over the next 3 to 5 years. An investor needs to know how it will execute tomorrow, not just how great it was yesterday.
That's a really crucial distinction, isn't it? The phenomenal financials need to be framed as an actionable strategic advantage.
Yes.
The analysis should detail how that sky-high ROE is being used to actively gain market share against a peer like Lilly, who is also, let's be honest, a very high-quality company.
Right. It shifts the argument from just a historical fact to a future thesis about competitive velocity. And that 71% ROE number is the key.
It's an incredible number.
The analysis could explore how that specifically translates into, say, an R&D and manufacturing speed advantage. You're essentially showing that it becomes an arms race that their competitor is mathematically disadvantaged in.
Exactly. I mean, if you're making 71 cents a profit for every dollar of equity, your power to scale manufacturing or just accelerate your pipeline is almost unmatched.
You can show how that ROE lets them deploy faster, spend more on R&D, and scale globally in a way that would require their competitor to take on, crippling debt to keep up.
That's the real difference. It's not just having a moat, it's actively using the moat to expand your territory. The focus should shift from just stating they have a duopoly to explaining how they're going to win it.
Through product differentiation.
Yes. Get into the specifics. Talk about their next-gen oral formulations or their non-GLP-1 pipeline. The current dominance is injectables, but pivoting to a convenient oral pill that builds a whole new convenience moat for the future.
So you frame it not as just a list of products in the pipeline, but as a proactive, competitive move to own the future standard of care.
Precisely. Defining the moat by next year's strategy, not last year's results. That is a much stronger argument for a growth play.
Much stronger. It speaks to intellectual rigor. Now, let's talk a little bit about how the analysis is delivered.
The tone.
Yes, our third point is all about analytical credibility. To maximize the report's credibility, especially with sophisticated investors, the analysis has to temper the highly promotional, aggressive language.
Look, I get the enthusiasm. I really do. But when you use phrases like the bat signal, screaming buy, or sale of the decade,
And that closing line, buying the king when he's on his knees?
it feels like it's from a high-energy YouTube video, not a deep-dive analysis. And that tone, that very emotional and dramatic tone, it kind of undermines the really good financial insights in the report.
It does. It risks alienating the exact type of buyer who prioritizes cold logic over hype. It makes a logical argument feel impulsive.
The conviction should stay, absolutely. But the execution needs a more elevated institutional tone. The report should really speak to logic and evidence, not just excitement.
The technical setup section is the perfect place to make this change. Instead of that emotional narrative, look at this candle, the bears tried to push it down.
Right.
It should just be a technical description. Focus on accumulation patterns, volume profiles, support levels you saw during that bounce off the, $47 lows.
That reframing shows calculation. You could replace that emotional line with something clear, like the recent price action shows clear institutional accumulation below $48, confirming the 47.04 level as a key technical support floor.
And mention the volume profile.
Supported by an above-average volume profile divergence during the recovery. See? Same point, totally different feel.
That's the voice of a professional, not a promoter. And that tone has to carry all the way through to the conclusion.
Absolutely. Reframe that the risk to reward is screaming buy line into a calculated objective risk to reward ratio.
Based on a specific price target.
Yes, a target you derive from the analysis. Say a recovery to the low end of the historical PE range, maybe 25 times, versus a defined technical stop loss that you just identified at 47.04.
That shows calculated risk, not just speculative hope. It proves the writer has thought about the upside and the specific point where the thesis is wrong.
It translates